Good afternoon, and thank you for joining us here at White Sands Magazine. My name is Jason Mason, and today we'll be presenting Mr. Peter Merrick of merrickwealth.com. And we'll also be introducing his new book called TAS, the Trusted Advisor Survival Kit. How are you doing today, Peter?
Really good, Jason.
Excellent. Just can you explain our folks back home about your book?
Well, to explain the book, I have to give you some background. I was a
Sure.
prof for 8 years, and I taught financial planning, taxation, retirement planning, a whole variety of things. And what I realized is that there were certain things that were missing for the advisor community. And what that was is helping people achieve what they want to. We've got a huge percentage of the population who are going to be transitioning from their work lives to the rest of their lives, and they're going to have to make major decisions, and they're going to have to work with professionals who can help them. And that professional is a trusted advisor, whether it's an accountant, a lawyer, or a wealth manager. But the individual has to decide, and they have to find someone they feel very comfortable to have those discussions with.
Excellent. Now I have a question for you. I've been asked this a lot from other people. What should one be looking for in a financial advisor?
Well, there's several things you have to look for. The first thing is they're competent. You basically know that they have a skill set. And you're able to find that the first place that you're able to find that is by the designations that they have. Now, there might be people who don't have designations who are competent. However, you at least know that this person has a level of education, they've passed a series of competency exams, and they have to follow a code of ethics and continuing education. So that's a starting point. After you found somebody who's competent, then you have to ask yourself, do you trust that person? And trust is basically someone who's trying to do good for you and also for themselves. And if you don't trust them, you don't really care what knowledge or experience they have, because they're not going to help you make that transition in your life to your goals and help you achieve it, because you have to look at it as the tortoise and the hare.
Right.
Reaching your long-term goals, you have to be the tortoise. You have to be able to run the long marathon to achieve those goals, because the most important goals in life happen over a period of time.
Excellent. And what I also wanted to ask you as well is the fact that I was reading an article in White Sands Magazine having to do with people purchasing properties abroad and planning for the future. Maybe you can elaborate a little bit more on that, because there's still a lot of people who ask me questions as to how do I go about purchasing these properties? Is it the right thing to do?
Well, that's a really good question. And again, with planning, and that's what the entire book focuses on in my practice, is figuring out what the person wants to achieve. So if they see themselves getting away from a cold climate and going to a nice climate, then that has to be put part in their planning, and in essence have to be motivated to do that. A lot of people talk about when they retire that they're going to move to a nice warm climate. They're going to go down to the Caribbean, or they're going to move to Florida, Arizona. Now let's imagine they go to a Caribbean island after they retired and they buy a place. And then after a year or so they realize they just don't like walking around an island and they can't get off.
Right.
It would make more sense for them while they're doing their planning process to actually go to those places, check them out, maybe get involved in timeshares, or visit friends, or just go to a hotel and make sure that it's something that they want, because they have to look at both a lifestyle and they also want to look at an investment, because in essence at some point they might get too old and they want to go back home and be with family because they don't have that energy, and they have to be able to sell it. And a lot of people, this is going to be an asset that's going to help pay for like the last parts of their lives, or to be their legacy to their family, friends, and charities that they want to give to.
Right, excellent. And it's funny that you mentioned charities. I've worked with many charities, one called Cadets Youth Center. And how would that benefit someone who's trying to do investment, for instance, a client of yours? How would that work with them teaming up with the charity, and what's the benefits of that?
Well, the number one thing is they have to have a connection to the charity. It's not all about the tax savings, because the government's going to give them tax savings. They're going to support you giving part of your money to, whether it's a political organization or not, a charitable organization. But you have to have that connection. So if something that's important to you, you have to basically, that's what's going to motivate a person, and then they'll build that into their planning. They'll tell their entire family what they want to achieve. They'll put in their wills. They'll also give bursaries and make charitable gifts, because it's something that's important to them.
Yes.
And unfortunately, a lot of planners, they don't ask that question. Is there a special charity that you care about that you want to give to? And they put it into the plan, and it's part of the plan.
Mm-hmm.
And again, a plan is just a plan because we can't really plan the future. But by
Right.
putting a plan together, what we're doing is we're changing how we act and how we see the present.
When should one start planning?
Well, they should start planning when they basically become conscious that they want a better life.
All right.
And the thing is, we have to know where we want to go. And that's so important that people sit down and they say, this is the type of lifestyle I want. So I imagine myself being in Florida 6 months of the year. I imagine myself coming back and staying in a cottage. I start imagining what I want to do. I look at the end picture that I see for myself. And then I got to figure out how much it's going to cost. And I'm going to go and have to figure out what that number is. And that number could vary for different people. It could be 1 million people for some people. It could be $20 million. But at least I know the end goal. And I can go and look at what I'm presently doing, what I currently have. And I can see what the gap is. And I can start planning to fill in that gap. And it's so much easier to work backwards than to work forward.
I understand. So the balance of life, begin with the end in mind.
Yes.
Excellent. Well, for some of our young viewers out there, do you have any tips for them? A Merrick tip?
A Merrick tip?
Yes.
I would suggest that they would look at people in their lives who they see as being successful at doing what they're aiming for, and they'll look for their mentorship. You know, there was a famous book that was written about 20 years ago. It was called The Wealthy Barber. And it's a story about a barber who basically made a fortune by investing. And he was very simple in how he did it. And when people would go to him because they looked at him and they said, you know, here's a simple guy who did a simple formula. What did he do? Because it's not that hard. We can always learn. That's the greatest thing about human beings. We can always bind time. I can learn, Jason, from your experiences. But the question I have to ask, and I got to understand for myself, do I even want to learn from your experiences? So look for mentors. Look for people who you want to emulate their lives, and find out what they're doing.
Excellent. Well, there you have it, folks. Thank you for joining us here at White Sands Magazine with Mr. Peter Merrick from merrickwealth.com. Thank you.
Thank you.
Have a good day.